Andy Tuttle here with the Tuttle Group at Cross Country. Another market update. We're going to talk about a couple things, so I hope you listen. We're going to talk about the market, what happened with the Fed this week, and also a couple of programs and a couple of ideas that if you're looking for opportunities as a homeowner, an investor, or a real estate professional looking to add more value to your clients and fish in some different ponds to help continue to add value to them, as I know we're working hard to do as the market changes, I think you'll like some of these ideas. So first with the market, CPI and the new inflation report came out on Tuesday, which was better than the market expectations, but not better than what we had expected. If you watch the past videos, we discussed that just based on the charts, the month over month and the year over year numbers, we were expecting a little lower number and some tamer inflation, even though it's still way higher than it was a couple of years ago. It is coming down, and that has helped the bonds rally some. Remember, the Fed hike normally actually is a good thing for interest rates. It's just that this year they hiked so much, so fast, and inflation, the news finally broke, right, that they couldn't hide it anymore. Inflation was out of control. That's why we saw rates spike. But when I'm recording this, it is before the 1:30 p.m. Central announcement from the Fed. That's what's going to be important. If the Fed, which we already know is going to hike 50 basis points, acknowledges the better inflation numbers from Tuesday and says that they do expect that inflation will continue to go down and they don't have to be as hawkish, then we should see a rally in bonds. If Jerome Powell spoils the party, doesn't acknowledge inflation, and says things that would make the market think he's going to continue to be hawkish, then we'll see a sell-off in bonds. But we've had a nice rally these last few weeks, and rates have come down over a point from their highs. So there's still a great opportunity in the market. And remember the 2-1 buy down. Remember that buying when rates are a little bit higher eliminates a lot of competition. So there's great opportunities, and our buyers are really capitalizing on those right now. Another way that you can capitalize is to look in the blue ocean strategies, right? So you may not know that we also do commercial loans. I've been doing commercial loans for 20 years, but I always broker those out and lose control, and it's been tough. I'm very blessed to be at a place that we actually do some very competitive and unique commercial loans. So you don't have to be an investor with 100 units, right, to get these commercial loans. So let me go over a few of them for you that may help you if you're trying to do some entity vesting, trying to really consolidate the loans you have on multiple properties, or you just want to get started. So when we do a blanket loan, so if you've got at least 5 properties, a lot of investors have stopped doing this, but we have some sources that will. You can roll those all into one umbrella loan and then do entity vesting on that. So, with Fannie Mae, when you're doing investment properties on your credit, you can only have up to 4 with one investor, 4 to 6, 10 total. There's a lot of restrictions. So you can get a lot of those off your books, put them in an entity, a series LLC, I would recommend, but talk to your CPA or estate planning attorney, and I can recommend you do a good one, of course. But then that's off your credit and off your books. It's in a business, and then you can go back and get some other residential properties in your credit. So that goes up to $10 million, right? So you can really help yourself there. There's a fix and flip and even fix and hold. So you can buy a property and it will finance the acquisition and the renovation for you to either flip it or to just turn that into a long-term rental. But you can do it as a commercial loan, which makes it a lot easier up front. And you'll have those construction loan rates. It'll be a 12 to 18 month construction loan before you either sell it or turn it into a buy and hold property and put it in with those other blanket loans, or just as a normal residential. You can do a new construction as an investor, even a single investor. You can build up to $1.5 million property. You can do a tear down. You can do a ground up new build on land. We have those products, and that's a big one right now that we see and people have success with. There's the elite builder. If you've got, a dozen builds under your belt, well, heck, we'll expose up to $5 million for you on that to go start a new project in a new community on some land because you already know what you're doing. So that's a great one. Bridge loans for maybe some homes you already have and you want to sell, but they're just not market ready, right? And so you can do some bridge loans, 12 to 18 months with us, and we can help you finance the fixing up of that property, right? So it is market ready, move-in ready, so you can get top dollar for it. And entity vesting is allowed on all of these. So I hope that's helpful information. If you got questions on that, of course, We're just a phone call away if you need us. If this is valuable for you or your clients or your friends or your family, just ask that you share it, because we want to help you out there. We know you got to navigate markets in different ways, but we're in your corner. We're in the fight every day. We're the buffalo. Remember my theme, be the buffalo. They run towards the storm and get out of it sooner, not like the other animals that run away, get stuck in it longer, sometimes freeze to death up in Colorado. We're the buffaloes, and we're running together. So happy to be a buffalo in your herd with you. Have a great day, and we'll talk to you soon. Cheers.